Hey everybody, welcome to the 10K project. Put your city and state in the chat. For me, we're going to get started in 4 minutes. We get started about 6:03. Put your city and state in the chat so I can recognize you. Happy Monday. This is our fireside chat. Today we're having a conversation about equity crowdfunding, and waiting for my sidekick to come in so she can take over the mantle here. But put your city and state in the chat. Hello to everybody on YouTube. Don't forget to subscribe to our channel. Give us a thumbs up. Hello to everybody on Facebook. You can give us some hearts as well on Facebook. We love all of that. We love it. All righty then. I hope everybody had a good weekend as well. Very blessed weekend, and you enjoyed yourself. You're getting back in the swing of things. We have some big things happening at the 10K project this summer. So I'm going to give y'all a little teaser of that. And we've got just so much happening here. So I want to welcome everybody today to the 10K project. Yes. Good evening, good evening, good evening. We have my sidekick has shown up.
Hello.
Actually, she's the main woman tonight. So she's actually the main woman every day and every night. How are you today, Tawana?
I'm good. I have a story every Monday about it's a Monday, right? This is another Monday. Mondays are always very predictable, yet I'm always surprised that they're equally as predictable from one week to the next. I'm hoping that one Monday I'm going to have like this amazing day where everything gets done and I'm sitting back, like with a tea in my hand at noon, not remembering what time it is. That is not my reality.
No, that probably won't be a reality for a while. So, all righty then. Well, we want to welcome, we got Tacoma in the house. We got North Carolina, Houston, Brooklyn, California, the Bronx, Chicago, Augusta, Georgia. Been a while. Nice to be back. Well, welcome back, Sasha. We're still here. And you can hopefully you've been catching up on the replays and everything. You can even listen to them at 1.5 speed on YouTube. So Maria from Philly, South Texas in the house. We've got Alabama. We've got California. Another Alabama in the house. Ms. Vivian is saying, how do you put a heart in the chat? I think it's the emoticons. I don't know. But I receive your heart as it's written out.
Isn't it like a 3 and a bracket or something like that?
Yeah, I know that some people are also able to copy and paste the emoticons themselves. So Latrice is saying, I don't think that's anyone's reality about the Mondays. I know it's not mine, but I will say this, none of my Mondays are predictable. So none of them. Chris is saying, I love you guys. We love you back, Chris. Michael from DC. We got Las Vegas is about to be lit this summer, Tandanico. So, I don't know if you work in the casinos or not, but if you don't, you may want to stay off the strip because I keep reading about how Las Vegas is about to go crazy, cray this summer. Sasha's saying, I'm slowly catching up, LOL. Oh, good for you. Good for you. So Latrice is from Kansas. We've got Florida in the house. We've got Annapolis. You're not too far from me. Tandanico saying, not me, I need their money. You know what? I can't blame you. We actually had the conversation about the wealth transfer, about to be $68 trillion of wealth transfer. How can we have our hands out so that some of the money comes into our hands? We want to be able to do that. So look, I totally understand. We've got Mario here in YouTube. We've got Gatan here. Happy belated Monday to you, Gatan. Hope I'm saying your name right. Oh, my son's Teespring is up and ready. Yes!
Oh, nice.
All right. So email me the link, please. Email me the link. We're not allowing people to put links in the chat, but email me the link, Tandanico, because I want to see. You've been talking about it for a while. So I definitely want to see info@the10kproject.com. And we got Suffolk, Virginia here as well. So I'm going to click the recording here and say hello, everybody. Welcome to the 10K Project. We are the nation's largest community of small dollar investors who actively fund Black-owned businesses. And when we get together and we start funding our own businesses, we can finally profit from our own innovation. We can create jobs and we can work together to build Black wealth. It's actually funny. As I'm talking about this, I got the thought in my head of an email that, I said that I was going to give y'all a little bit of information with regards to some of the things that's coming up this summer. Well, right now we're working with our marketing person, and we have put together a lot of different pieces of information and emails and things like that. We're going to be doing a membership drive for 6 to 8 weeks this summer. Tawana and I are finalizing all of those details. But in one of the emails that I have going out, there are a lot of inventions that Black people have created that we have never profited from. So in one of the emails that's going out, it's like, why haven't we profited from, I want to say it's the ironing board, the stoplight. I think it's the ironing board, the stoplight, invented by a Black person, the alarm system, the home security alarm systems, invented by a Black person. 3D was invented by a Black NASA female engineer. You know, so we've invented so much that we're not getting paid for. It is about time for us to get paid for our innovation. Put a 1 in the chat if you agree with that. If you agree that it is time for us to get paid for our innovation. Great. So in order for us to do that, we all have to come together and we have to consider funding the businesses that make sense for us. So I'm going to just give a brief presentation on what the 10K Project is. And I'm going to let Tawana come in here. And yeah, Kiara saying I had no idea that Black people invented all of those things. We're going to actually do a session one Monday, one fireside chat, where we go through the inventions that we've made, because there were inventions that I saw that I didn't even know, Kiara. So don't be embarrassed at all, because we're just not learning these things, and we're definitely not learning them long enough. Young enough is what I was trying to say. So I just want to remind everybody, especially if you're a 10K Project member, if you're not receiving the text messages about the Bet on Black pitches, we sent one about 5 o'clock today. So if it didn't show up on your cell phone, you're not on our text message list. You can get on by texting 10K to 202-410-4202. I'm going to make sure to start adding that to the emails as well, so that we can have, because we are getting more members now, we want to make sure that you're on our text list. So, you know, when we talk about the 10K Project, one of the things we need to understand is that businesses provide jobs, they provide economic stability, they help fund nonprofits a lot of the times, and they need money in order to start and grow. However, our businesses are least likely to get funded. And when our businesses do get funded, we often start with 1/3 the capital that our counterparts do. And if by chance one of our businesses is funded by an angel investor, it's typically not us. And by the time we find out about these opportunities, it's often too late because the majority of the profits have been made. So what can we do about this? Through the Jobs Act of 2012, there's something called equity crowdfunding, and it allows Black entrepreneurs to raise money from regular people like you and I. So we're called the crowd, and this is equity crowdfunding. And the way that it works within the 10K project is simple. Entrepreneurs work with an equity crowdfunding portal to raise anywhere from $10,000 to $5 million. Then every week we feature a Black-owned business that's raising capital, and they do what's called a Bet on Black pitch. So they come to the community, they talk about their company, they talk about the opportunities that they have, where they see the business going, and then the community has the ability to ask the entrepreneur questions, get your questions answered, and then you also, as investors, have the ability to do your own due diligence, read their business plans, do research on the company, and if you as an individual likes that company, you can receive equity or shares or partial ownership in that company if you choose to invest in that business. And then if the company makes it big, the crowd of investors win. And if not, investors only lose what they have put into the company. So again, we have the ability to fund our own companies, profit from our own innovation, create jobs, and work together to build Black wealth as the 10K project. So this is the ultimate ecosystem that we're building. The first group of people that we're bringing together are the entrepreneurs that are looking to raise capital. The second are investors. These are everyday people that want to raise money, that want to invest in Black businesses, as they hear the Bet on Black pitches and they do their research. And then once these entrepreneurs raise money, we didn't want to see the Black dollar just leak out of the community. So we have put together an expert directory. If you are a member and you have not filled out your profile for the expert directory, please do that because I'm going to be promoting that a lot as well over the next few weeks. But if you are, for example, a CPA, an attorney, you sell merchant services, you have shea butter, any kind of product or service that you have, we want you to include yourself in the expert directory because as these entrepreneurs need services, we're encouraging them to come to the expert directory in order to find you. And other people in the community that want to buy from Black vendors will also come to the expert directory to find you as well. So that is what we're doing here. And we want to invite anybody who is not a member to become a member. You get access to the Bet on Black pitches, which happen Tuesdays at 8 p.m. You can place yourself in our expert business directory. You are also able to attend our members only wealth building webinars. We talk about real estate, land, tax lien, stock options, crypto, more. We also have peer-to-peer conversations around wealth building. And we have exclusive content in our Knowledge Center. So this is a one-time lifetime payment of $100 for you to become a member of the 10K Project. You can go to the10kproject.com to become a member. All righty then. So how many members do we have in the chat? Put a 3, hidden in here today. Put a 3 if you are already a member. Put a 3 in here. Yes, we love our members. Perfect. If you wouldn't mind in the chat, tell people why you became a member and why you continue to come back week after week for our fireside chats. Or tell people how you like the Bet on Black pitches. Anything you want to put in there so that people can begin to see some of the good things that we're doing within the 10K project. So Tawana.
Nice. Yes.
So do we want to, first of all, did I forget anything? Because I always ask you that. Did I forget anything? Is there anything you want to add?
I do want to add, I want to add, especially since there's so many members in here already. I don't know if you guys saw my Facebook post, but the last week's founder, I had sent him the list, right, for the perks. And I'd mentioned in my email to him that, I had a couple of people that were kicking themselves because they missed the deadline. And he said, don't let them kick themselves. I'll extend it. And so he's extended that free perk deadline for anyone who either already invested with him or was thinking about it, but didn't get around to it yet, because his campaign is still open for a while, but you wanted to do that in order to get that free perk. If you send us, he gave 24 more hours, so that would put us through tomorrow evening. So I would say by the end of tomorrow night's pitch, you probably should go ahead and execute if you want to, right? This is not endorsement. This is individual investment experience. I'm just giving you the information that if you wanted to invest in last week's founder, he has extended the free perk. But I always say, do your due diligence, which kind of ties into what we're going to talk about tonight. I'm going to show you how to do some of that due diligence and where to go and what to look at.
Absolutely. So I have set the email for everyone again to look at the replay again, go check out the campaign URL. Is probably in your emails right now, because I set it for 6:15 just because I didn't want people to get confused with, are they canceling today? Because, so yes, so it's in your emails right now if you want to, again, take a look at that replay, and only if you can afford it and if you like the investment. I wouldn't suggest investing just for the gift. However, the gift is nice.
Absolutely agree.
The gift is nice, exactly. So, and I want to thank everyone as well who's putting so many great things in the chat. I can't read them all right now, but Tawana and I are going to print out the chat so that way we're able to read through why you became a 10K project member, and we'll probably use some of these things during the summertime for our membership drive. So we hope that anybody who has put their information in, that you would allow us to, if you wrote something really compelling, we want to be able to highlight that for our membership drive this summer. We also have information for our economic report. So that probably will be released in the fall, but we've finalized and closed the loop on it, got all of our numbers together, and we're going to be working on that as well. So that should be exciting. And we have this summer for our membership drive, we have a quiz that we're putting out, and it's what kind of wealth builder are you? So that is going to be at the heart of our membership drive. And we've got so many things that we're working on diligently for the community. You'll be able to take the quiz, you'll be able to pass it on to your friends, and it's going to be a lot of fun, but it'll also be, I think, something that will give you a lot more introspection as well with regards to the type of wealth builder that you are. So. Okay, then. So we're going to do a couple of things tonight. Number one is we're going to review a couple of the slides with regards to equity crowdfunding, what it is. It's based on a session that we had last month with regards to equity crowdfunding, but we spent a whole hour on that presentation. We're only going to do the first few slides today. And then Tawana's going to walk us through how we're going to look at the due diligence that we do. And we're actually going to look at 3 examples of campaigns so you know what you're looking for, where things are, and potentially even what certain things mean as well. So with that, I'm going to share my screen again. And we're going to come up here. Okay. So again, we did this presentation a couple of a month ago. And we want to especially thank Brian Belly of Crowdwise, who allowed us to use his content and customize it for our audience. So we always want to give major respect to Brian Belly. So again, this is an overview. It's just a course for novices and newbies for a high-level introduction into equity crowdfunding and for investors who want to review fundamental investment concepts as it relates to Regulation CF. Now, CF stands for crowdfunding, and this is the law that is used to govern crowdfunding, equity crowdfunding, because it is governed by the Securities and Exchange Commission and FINRA. We are also doing disclaimers for this evening that this is for informational purposes only. We're not professional financial financial planners, not certified in anything. We're not lawyers or tax advisors or anything like that. We're just two women who are trying to educate the community. So nothing within this document should be construed as investment advice, tax or legal advice, or any kind of other advice. We always suggest that you consult with your own professional tax, legal, financial, and other advisors before making any investment decisions. So we talked before about the different types of crowdfunding out there. There's rewards-based or donation-based. Donation-based, most of us know, is GoFundMe. But there's also rewards-based crowdfunding as well. There's Fund Black Founders, which is owned by Renee King, who is a Black woman. And she runs that specific rewards-based crowdfunding portal. There's also a new rewards-based crowdfunding portal run by two Black gentlemen. Tawana and I have had a chance to speak with them. They are launching pretty soon, but they're very dynamic individuals as well. And we'll let you know, we'll add them to the list over time. There's also debt crowdfunding. So there's Prosper and Lending Club. And then there's equity crowdfunding, which is what we participate in when we do our Bet on Black pitches. So Buy the Block is Black owned by Lynn Smith. There's also WeFunder, and then there's also Start Engine and a ton of others, Republic, Net Capital, etc. So you may be asking yourself, if you're new here, what is equity crowdfunding? It is based on a law called Crowdfunding or Regulation CF, which was started by the Jobs Act of 2012. And here's a perfect example of how backers lost out on money because they didn't own equity, they instead got rewards. So there was a company called Oculus. And in 2012, Oculus raised $2.5 million on Kickstarter from 7,500 people. But it was a rewards-based crowdfunding campaign instead of an equity-based. Well, in 2014, just 2 years later, Facebook bought the company for $2 billion. And firms like Andreessen Horowitz, which is a big VC firm, made 8 times their money in 3 months of investing. 8 times their money. The difference between the product backers and Andreessen Horowitz was $20,000 that the backers would have received if they had equity in the deal, instead of just receiving the product. So equity crowdfunding goes by a lot of names: Regulation CF, there's equity crowdfunding, there's Title III, and then this is really a new investment class for regular people like you and I. It allows us to diversify. It is greater risk, but there's also greater reward. And it gives us new opportunities, and especially in our community, it gives us just a lot of new opportunities. So with that, I'm just kind of going through here. One of the things that did happen in March is that actually March 15th, the total raise that a company can do is now $5 million. It used to be $1,070,000. Now it's $5 million. Also, a lot of people don't know that these companies can raise $5 million every year for their companies. So they don't have to just come and do it once. But crowdfunding is growing rapidly. It is going to be the new way that companies are funded. And the average raise is about $300,000. But here's the thing, even with crowdfunding, with equity crowdfunding, there's still a lack of diversity in equity crowdfunding and in angel investing. And that is why the 10K project is so important. If we do not support our Black businesses, then they still are going to run across a lot of the same hurdles that they've always had. So, Tawana, I don't know if you have any other comments with regards to that. I'm going to stop right there. But
that was very thorough.
Okay, all righty then. And if you want to see that entire presentation, you can go to our YouTube channel and check. A month ago was like Equity Crowdfunding Training 101, or it's in the Knowledge Center under Crowdfunding Training. That's an easier place for you to find it. All right, Tawana, you ready to be up?
All right, I am ready to be up.
Okay then, so everybody, our exercise tonight is to learn a little bit more about how to do due diligence. And due diligence is just a fancy term for research. So what we've done is we've selected 3 current campaigns that's happening now. We will say we are not endorsing any of these campaigns, not endorsing them. We're just looking through the content in order to see, where information is, what information means, etc. So Tawana, I have them pulled up, but I don't know if you were able to pull them up. If you were. So why don't you share your screen, and that way you're better able to navigate.
Perfect. Okay, can you guys see my screen?
Yes, we see it.
Okay, perfect. So in the investment world, especially with crowdfunding, you have 3 common types of deals. You have an equity deal, you have debt, and you have what's called a SAFE. And so we picked 3 campaigns that are in each of these categories so that we can just see the different information that is provided to us, as well as we can better understand the layout, right? So hold on a second, let me close some of this other stuff out. Let me stop sharing for a second. Close down some of this other stuff I had up earlier. Okay, here we go. So, and we're also going to pull campaigns from different platforms, because we are platform agnostic here, right? Wherever our Black founders are posting their campaigns, we kind of work with all of them. We don't have one favorite portal that we pick from. I'm out there looking for Black founders on all 60 portals. And looking to see if they have Black founders, and then looking at the campaign. So you're going to see 3 highlighted here tonight, but they are not highlighted for any particular reason other than the 3 businesses I wanted to show you happen to be on these portals. So just want that disclaimer as well. We are not endorsing the founders, nor are we endorsing the portals. Okay. So this first company is Relay on Demand, and Relay on Demand was one of our companies that we've done a Bet on Black pitch for, right? And so they have 9 days left in their campaign. You can see that. You can see the amount they've already raised, right? And you can see that information kind of here at the top. I won't say they all, because some just give images here. Maybe they don't have their videos available yet, but most of the campaigns have some kind of introductory video, right? Ideally, a founder should create a new video that compels an investor. Oftentimes, what you'll see here, though, are videos that are really about the product or the service as if you are the customer. So it's almost like they're using their marketing video to double as the investment video. So you'll just, make note of that because you'll see that. And a lot of times, if they're not talking directly to you in this video as a potential investor, you may have to do more digging for some of your answers because they don't answer them in the video. Whereas the videos that are targeted for the investor, I find they answer a lot of the questions already, and you don't have to do as much digging to get your answers. So I just highlight the video for that point. Depending on the portal, the information you're looking for is going to vary in location, right? So sometimes you'll see it down the right-hand side of the screen, depending on the portal. Sometimes it's in the left-hand side of the screen. Sometimes you got to go all the way to the bottom and find it. The key to understand is if you don't see it easily, keep looking, because by law, they have to put it here if they are an approved portal and the campaign has received its SEC approval by submitting their Form C. So if you don't see it right away, keep scrolling, keep looking, because it has to be here. If you never see it, then I would tell you, be very careful to make sure that this portal you're looking at is an approved FINRA portal, because if it doesn't have the legal disclosures and documentation there, then that would be a red flag for me as an investor, right? So on Republic's site is the site we're looking at now. Their information is always down the right-hand side of the screen under deal terms, right? And so this particular campaign, the type of security is a safe. And I'm going to do a lot of clicking into their information because I want you to see what these sites have in regards to information. So I'm going to do a lot less of my opinion, right? Or what I do. And I'm going to actually take you through the information they have, because I really want you to make your own assessments, but I want to show you where to go. So I hope that's okay with everyone. So the type of security is listed here. This is a crowd safe. So we're going to talk about that first, right? And what a crowd safe is, and I'm going to go into their information and I'm going to learn more, because you want to go to where they tell you what things are and what things mean, because that's what you're going to make your determination based off of, right? Is what this site posts in regards to the campaign they're highlighting. And so a SAFE stands for Simple Agreement for Future Equity, right? And when you go down to how does it work, this is a very good explanation. So with a SAFE, investors are using the crowd safe to get a financial stake in the company, right? But you don't become an immediate holder of the equity, right? So in a safe situation, your investment is converted to equity at a later date. And that later date can vary. It's based on a trigger event that occurs. So if the company goes to IPO, if the company goes to, is acquired, then the investors' monies or dollars or stake is then converted to equity. So be mindful of that when you invest in a safe. They're not going to, after the campaign closes, send you a certificate of equity ownership, because you're not yet an equity owner, right? You're an investor with a financial stake, but you don't yet have that equity, that you actually own a piece of it yet. And the reason for that is until they go through this trigger event, there is no equity yet. Okay. And some people like safes. And then others don't like safes for that reason, that they're not immediately equity owners. So once you do your research on safes, I would suggest that you kind of make an assessment on your own on, are safes good for your portfolio, based on what you know you want to do and what you're trying to build. Okay. With all of these security types, there are pros and cons. For every 5 pros, somebody can give you probably 5 cons, right? So just be mindful that all of the information is here. Especially if you're first-time investors in crowdfunding, please take the time to read the FAQs and the information on the portal. I know we're often excited about the deal, the campaign itself, right? And we want to learn about the campaign, but you also want to do some due diligence around the portal and make sure that they're providing good information to you so that you know where your dollars are going. The good news is with any of these portals, they don't get your money, right? They're pass through, right? The money goes directly into escrow when you hit invest. So these portals never actually hold your money. So you don't have to worry about them from that standpoint, but you want to make sure that they're providing you with good information to help you understand how your investment's going to be handled. Okay. Just going to go back. Okay. So you'll also see the valuation cap, and you'll see that on every campaign. And what the valuation cap is, the maximum at which your investment converts into equity, right? So again, learn more. You can take that deeper dive and read more about how that all works. But ultimately, what you're saying is you believe the company is going to be worth that much money, right, in the future, so that when you make your determination on if you want to invest or not with them, right? Some campaigns give a percentage of discount. This one's giving 10%. A lot of times you'll see them give early investor discounts. Sometimes they'll give extra shares if you're an early investor. So that's why it's also important to read the detail of the campaign to see what perks they're giving, right? They all provide a minimum. The minimums vary. On $100, they can go up as high as $1,000. I've seen one that was $1,700. That was the highest I've seen. But they absolutely vary on the amount that you can invest. Right? In addition to the minimums that they have assigned, the SEC also assigns a maximum based on our individual net worth. So built into the portal, they'll have financial questions that they'll ask you. What's your net worth? What your salary is? And to be able to get to that net worth answer to help you determine what your maximum is to invest. And your maximum is going to be for a 12-month period across all crowdfunding platforms, right? So if your net worth is less than $107,000, and net worth is calculated based on your salary and any assets you have minus your home, your primary residence, that doesn't count, and then minus any debt. And so that's how you get what's left, which is the net worth. And if the net worth is less than $107,000, more than likely the average person will be able to invest about $2,200 a year. If your net worth is over $107,000 a year, then that number goes up substantially, right? Where the SEC has allowed you to then, be able to invest more. And this is all with being a non-accredited investor. Accredited investors don't have a limit on how much they can invest, but non-accredited investors need to provide that net worth information because there are limits. Okay. A funding goal. Campaign's going to always tell you how much money they're looking to invest. Now, on Republic, I've noticed their minimum for everyone on their portal is $25,000. So that's going to always be the minimum you see on Republic. But on other portals, if someone only needs 15, I've seen that. If someone only needs 10, I've seen that, just not on Republic. They have a standard minimum. So again, you'll start to learn what the different portals require as you start to look at them more, as we start to have more pitches and you start to go out here and look on your own more. Right? They also all have a maximum. So, we've shared with you guys that as of March 15th, the maximum went up from $1,070,000 to $5 million. Well, you won't see $5 million on all of the campaigns just yet, because you have to have 2021 financials in order to be able to raise that amount of money under the new regs. And most of these campaigns would have started their application process in 2020, more than likely, right? And therefore, they would have provided 2020 financials, which then means they have to post their campaign under those 2020 rules, which would be up to the $1,070,000 still. So as we get later through the year, and as we get into next year, we'll start seeing more of those I'm looking to raise $5 million campaigns versus the ones that are going to cap out at that $1,070,000. So just again, something else to just be mindful of. And they always tell us the deadline. Well, somewhere on the page, they tell us the deadline. WeFunder is another portal, and they never have the deadline stated clearly. They tell you when there's a certain amount of days left towards the end of the campaign, but they never tell you as clearly as like we see it listed here on Republics, what the clear deadline is. So that's another thing that you have to sometimes go drilling for, is to see when the deadline is. Right? And then we'll see, if you click into how it works, they'll give you the deal terms, kind of how everything will flow. That's something else you can look at. Then we'll get into the documents. The Form C. Form C is the Mac Daddy of all the forms, right? So the Form C is that form that the SEC requires before a founder can be on any crowdfunding platform for Regulation CF. Right? And how you click into the form, a lot of times there's 2 or 3 clicks to get to the actual document. And here it is. And you see this one has more than one. Whenever they do any kind of amendment, there's another Form C that's populated. A lot of times they'll do an amendment. A good example, what I just said. So let's say that person who wanted to raise money the beginning of 2021, the law changed. Now they want to get the 5 million. They want to benefit from being able to raise up to the 5 million. They would have to submit new financials, which means they would have to complete a new Form C. So that campaign would have more than one Form C to look at. I always look at all the Form Cs because I like to see what they changed. Sometimes I've seen them change ownership. Sometimes I've seen them amend some of the financials. What's something else I've seen? I've seen them not just change ownership, but add other names to the Form C. Like, maybe the CEO filled it out, but then later went and added the COO to the information. So it's when you look at the Form C, you can easily see what information was changed. Right? So this is a Form C. So we're looking at Relay on Demand, right? We can see the company name, type of company they are, right? So they're a Delaware corporation. We can see how long they've been incorporated, right? So that's helpful information, right? And I'll say this, when you do the due diligence and you kind of already have this information in your mind, some of the answers that our founders may give with on the Bet on Black pitches, when you see some of this information and go through the financials, a lot of those answers make more sense if they didn't already make sense to you when you heard them the first time. But a lot of times I'll look at a Form C after the pitch and just kind of say, okay, they answered this. Let me see where I could find that, so that maybe that wasn't a question we had to ask. Maybe that information was already in the paperwork. So I like to watch the replays of the Bet on Black pitch and then look at everything again to see if I can better understand everything that they're trying to do from a business standpoint and tie the two together. So it gives us the physical address of the issuer. The issuer is the business, right? So in this situation, Relay on Demand, right? Gives us all of the information. This is the intermediary. So the intermediary is the portal. So now this section is looking at Republic's information, and Republic's legal entity name is Open Deal Portal. Right? Then down here, you'll get to the offering information, right? So exactly how many shares are they offering to investors? That information's here. What the target amount is they're trying to raise, that information here is here. That's that 1,070,000, right? Oversubscriptions, are they accepted? Sometimes you'll see a campaign, they've reached their maximum. However, if they file an amendment, so a good example, again, I'll go back to my 1,070,000 versus the 5 million. Maybe they got to their 1,070,000, right? But they have plans to go ahead and get their updated financials, so they know they're going to be raising more down the line. So what they do is they can ask for the permission to oversubscribe. And so what that does is it kind of acts as a wait list, right? So let's say Relay had already met their 1,070,000 raise. If I still wanted to invest with them, but I missed the window before they got to that 1,070,000 max, I could go on their wait list, and more than likely there'll be some kind of oversubscription tag on the campaign, so that you'll know that your money's not taken until the campaign opens back up, but you're kind of sitting on a wait list in reserve. So that's what that tells you. This tells you the deadline the target offering amount is. Oftentimes, this corresponds with the deadline of the campaign, not 100% of the time, but maybe 90% of the time I've seen this date is also the deadline of the campaign. This tells you more about their annual reporting and disclosures. So they've got 5 current employees. These are the financial numbers that they disclose. Right. And then you can see here, the CEO is the applicant here, right? Okay, and that's the Form C. If this Form C is not on the site, they have not done what they needed to do with the SEC, right? Okay. Some of the other things you'll see in documents, this particular campaign doesn't have it, but sometimes you'll see separate financial documents. I think his might be down below, actually. They give all of their marketing information. Like, it's a lot of information to go through. So when I'm always saying do your due diligence, like, I'm saying that for a reason. Okay, it doesn't look like he provided any additional. We'll look at one campaign, and I know they put some information down there. Some of the other stuff to look at, their traction, right? So that's all the marketing stuff, the competition, that'll give you information about that. Always, always, always research the team, right? So here it takes us to the founders. They'll give you the rest of the team here, just kind of give you basic information on the team. If you wanted to take it a step further and look these team members up on LinkedIn, Facebook, whatever, these are your investment dollars. So however deep you want to dive into this is up to you, right? Nobody can tell you too much is too much and too little is too little, because you are the investor. These are your dollars. And 10K is, we're only presenting certain founders to you as options when we do our Bet on Black pitches. But again, I can't say this enough, and I'll keep saying it. You are the sole decision maker in your investment journey here with 10K. We do not do groupthink. We are not a fund, so we don't all invest in the same thing. We simply, research on our own to determine if a campaign meets our criteria for our individual portfolio. Okay. So that's the SAFE. That's just an example of a SAFE campaign and what that means.
Did you show people the Q&A? I didn't remember.
Oh, I can do that. I didn't look at Q&A.
That's actually one of my favorite places to go.
So Q&A is really about the portal itself, right? Well, let me back up. So there's 2 Q&As on the site. On the main site, you have a Q&A section that'll tell you everything about crowdfunding and being a portal about Republic and what Republic can do for you and what your rights are. So there's those FAQs. And then there are the FAQs within the campaign page, right? Which are also super, super helpful. So looks like on this campaign, the only question that Relay on Demand has is how do I earn a return, right? And then they answered that question here.
I meant the discussion.
Yeah. I'll say this. Each campaign, so kind of behind the scenes, each campaign has the ability to build out this campaign page however they want to. So when I tell you, you really have to look at each one, I really mean that, because founder A could say, I want to add 37 FAQs here. Whereas founder B says, well, we've talked about a lot in the other information. This is the only thing I don't think I answered for them. Let me just add this one question. So you really want to look at all your campaigns with the same level of critique that you do for one, because they can build this page differently and the information will be different, if that makes any sense. And then the discussion. So I love this too, Cherie. I always look at the discussion chain. And it's so funny because I was looking at one the other day, yesterday it was, and people were complaining because the founder wasn't responding timely. And like one potential investor, actually he wasn't even a potential investor, he had invested in this particular campaigns, and I'm not talking about Relay on Demand, I'm talking about another one I was looking at yesterday. This must have been their second round, because the potential investor was complaining because he had asked a question on like March 3rd, and they hadn't answered him as of yesterday. And he kind of went off like, I'm already an investor and I was going to raise, I was going to add more for this next raise, but I'm concerned you're not being, responsive. Like he kind of went off, rightfully so. And I thought, I wonder if all of the founders are if they understand the importance, right, of monitoring their campaign page. Like, is that something the portals tell them they need to do? Because when you ask questions here, you are expecting an answer. A lot of times your question is going to be the determining factor on how you move forward. So, I think it's helpful here to look as well. Cherie just said she likes to look here, but it's always good to see what questions people ask and how the question was answered, but then also the timeliness of the answer. Is something that you want to pay attention to as well. All right. In fairness to the founders, many of them don't realize that a crowdfunding campaign is a second full-time job for them, and they're already running the business. So they have to find that balance, right? And making sure the campaign needs are being taken care of, but still making sure that the business is not slipping, because ultimately that's what the investors care about, as well. So the founders don't have it easy, in my opinion, when they take on crowdfunding as an option, because it's a lot of work that they have to put in. So with that said, maybe we give them a little bit of slack, right? Just because we know they've got their hands full. Let's see. So I think that's everything I want to show you in regards to this, because I want to show you another portal that sets things up a little differently. Okay, so I'm going to close out of Republics. All right, so this is Net Capital. And Net Capital is, again, another portal. But this particular deal was Dashable, and Dashable was an equity deal, right? So how equity is different than the safe, with equity, you make an investment and you do immediately become a stakeholder, right? So when the campaign's over, you get that certificate that says you bought X amount of shares for X amount of dollars, right? And so that's how the equity deals are different. When you see those, sometimes on some portals, they'll actually say equity. Sometimes you'll see it like it's here. It says a share price. So remember, on the other one we just looked at, it gave the minimum amount you could invest, right? Here, it's giving you the minimum you can invest, but it's also telling you how much each share is. So you'll be able to say, for $100, I get X amount of shares at $4 a piece, right? Again, it gives you the deadline, tells you the total amount they were looking to raise, right? And so that's the biggest difference between the safe and the equity, right? So on net capitals, their information is not to the right, right? Their information is over here to the left. And then some of it's even at the bottom. So when you look at this portal's information, they list some introduction, why you should invest in us. They also add some of their marketing information. I'm just scrolling down so you can kind of see all of the information they're showing you. They're showing you here how they may be different than their competitors. So that's the competition stuff, right? Here are the founders. Here's their team. Oh, that's actually testimonial. And then when you get here, this is where they tell you how they're going to use the money that they're raising, right? All campaigns don't list it here. Sometimes it's in the disclosure notices, but again, it's one of those things that it's always listed, how they're going to use the money, right? So you can see the breakdown of how this particular company is going to use the money. You see the terms, right? I've seen a lot of where they're giving you kind of formulas to look at, which I think is really helpful, right? And then here you'll see the income statement, the balance sheet, the cash flow statement, the change in equity statement, the executive certificate, like all of the information. Here's the Form C, right? So here you can see here, they actually had several Form C. Here's the latest. Okay. Understanding the risk. All of these campaign sites are going to tell you, only invest what you can afford to lose. They're all going to tell you what your rights are with cancellation. They're all going to tell you not to invest more than you can afford. Like all of that stuff, all of those are regulatory. So that's going to be listed here probably multiple times. You'll see that on these campaigns. Also, most of the campaigns also take you to the founder's social sites because, they want you to be able to share the information that you have. If you like the deal, be able to share this deal on your social and all of that. Okay. So I just wanted to point out how equity deals are different than safes and how you see all the portals lay out their information very different, right? Even how you search is different on some of the campaigns. Republic doesn't have a search bar where you can, let's say I know the company name. I can't go to Republic and just put in Relay on Demand. They want you to scroll through all of their deals. I'm sure that is strategic. But something like Net Capital, if you were on the main page, they do let you search by typing in the name. So just everything about the portals are very unique. The thing that you want to know is that the fact that they have to have all of the information and disclosures, that is not unique, that is regulatory, right? So where you find it may be different, but it is here. So make sure you take the time and look through all of the information. Okay. All right, I'm going to go next to Honeycomb Credit. So Honeycomb Credit is primarily a debt portal or platform, crowdfunding platform. The other portals also could have debt security deals, right? But Honeycomb Credit, the majority of their business is going to be debt. And I just pulled up, this is not a founder that we've worked with, but the founder that we did work with on this portal, his financial information is gone because once the campaign closes, the financial information is suppressed on most of the campaigns. So you really the campaign should be active for you to see all the financials. All right, so this company, Vegan Soul on Honeycomb Credit, they are debt. So they are asking you to loan them money, right? So that's the difference between equity. Equity is I am asking you to invest in my company and you get a share, right? Safe is I'm asking you to invest in my company. You have a financial stake, but you don't yet have a share until we have some kind of a liquidity event like acquisition or IPO. And then it converts, your financial stake converts to equity after the fact, in the future, right? So it was simple agreement for future equity. Okay. With debt, debt is just that. We're going to loan them the money that they need. The terms are going to vary, right? So you want to look closely at this information so that you can determine what are the terms they're offering for you to determine if you want to make that investment. Right? So this founder is 92% of the way to her. I happen to notice is a female founder, and she's 92% of the way to her target of $15,000. So congrats to this founder, right? She's got 16 investors. Her minimum is 15,000 that she's trying to raise. Her maximum is 50. The term of her debt, the length of the debt is 42 months, and she's offering 12% interest rate. All right, here's her video introducing her business. Now, the way Honeycomb does it is their documents are off here to the right. So you can see her project, you can see the business, you can see the deal summary. I really like how Honeycomb sets up their deal summary because I'm a visual learner, so I really like it for that reason. But they make it easy for you to see what you're going to get for your investment, right? So you can see here's the basic deal summary. And then here you can see if you invest $100, there's a one-time fee of $2.85. Your return based on the amortization period is $8.70. So then your total repayment becomes $122.95. Like, I like that breakdown because I'd like to see what I'm getting. Okay. And then all of the same information is included. They also need a Form C. So here's going to be your Form C document. Even with debt, that's a document that's still necessary. I'll just pull it up so you can see it looks exactly like the first one we looked at because it's the SEC's document, right? So you'll see her information here. She's an Idaho company, sole proprietorship. It even shows you the amount that the portal's going to get from the raise, right? So it shows you that. They showed you that on the other one too. I don't think I made note to call that out on the first one we looked at, but it would show you that also how much of the raise that Republic would get or Net Capital would get. Form C would say that for them as well. So it gives all that same information, right? When you look at here's her financial report and disclosures, right? And you'll always see every state listed. This is every state that they could raise money in. Okay, so that's her Form C. And then the same, their comments, Q&A. Okay, so those are the three major deals. I'm going to stop sharing. The three major deals: safes, equity, debt. All approved security types for crowdfunding. Again, all of the portals are going to be set up differently, but all of the regulatory items are going to be there. So you just have to look and search for them. If you're not sure about something, or if you have a question that you don't see the answer to, go to that discussion field, right, and ask the founder. Because if the founder doesn't know, then nobody knows, right? So I say always ask the founder whatever questions you want to have or what you want to know. Anytime we bring a Bet on Black founder to you, it is my expectation that you guys are going to go to their campaign, which is why that's how I start the session out, right? I pull up the campaign first so that you know where you go. In the chat, we're constantly putting that campaign link in there so you can click on it. We never want you to invest in anything blindly. It's always about that legal information, the financial information, what your return on your investment could potentially be. Like, it's all about that. It's less about the warm fuzzy of I liked the founder, or, it's more about the business. And so that's why we take you to that. And the more and more you look at these, you'll start to learn also what questions to ask the founder when we have them. You guys already ask amazing questions though, but you really do. I've had several.
You ask better questions than I think of
Yeah,
sometimes.
I had some of the founders come back and say, I wasn't ready. I was like, I couldn't tell because you answered them. So that tells me you know your business. But I think they thought they were going to be asking very basic questions. And I mean, you guys were hitting them, but I had to, like, I'd be over here sometimes Googling, what's that term? Like when somebody will put like, they'll say, what's blah, blah. I'm like, well, okay, I don't even know what blah, blah, blah is. Let me look that up real quick. So our audience is super sophisticated. And I just love it. I love it. I love it because it keeps the founders on their toes. And so far, we've had all of our founders, in my opinion, they've kind of risen to the occasion and they've known their business. So that means the world to me that we're not, it tells me that the due diligence we're doing up front to bring them to you is working well because they're coming to you knowledgeable. We haven't had anyone fumble yet and didn't know all the answers to, how their business is being run and their future and all of that. So I hope this was helpful.
We do have some questions as well, Tawana.
We've got questions. Oh, awesome.
Okay, so the first question is from Kevin. I am new to crowdfunding, so I apologize for the simple question. Please do not apologize. Doesn't matter how simple or crazy it is. We're here to learn as a community. So that's number one. Continued question. In crowdfunding campaigns, do they tell you how much of the company is for sale, i.e. the campaign for 20% to 40% of the company? You can figure that out based on their post-money valuation and how much of the company they are, or how much money they're raising. You're able to calculate that in a roundabout way. But it also depends on how much money they actually end up raising. So
and remember also in the Form C, they have to tell you how many shares are up for grabs, right? So that also can give you, if they have 53 million shares and they're only putting up 23,000 for crowdfunding, then that's a very small piece of ownership in the company.
Right. The other thing that I will say as well is this does not apply to safes and it does not apply to debt. It only is for the true equity crowdfunding. But that actually wasn't a simple question at all. That was quite advanced. Chris is asking, first off, you guys are giving us tons of information to help us make wise decisions. My question is, when you choose what pitches you will allow to present, do you do personal reach outs to the CEOs or owners of the companies or products?
Oh, yeah.
That one to you.
So Chris, yes. So I'm talking to founders. Most of the time we're talking twice before we finalize anything. And then we're following up with emails with our agreement with them. So yes, absolutely. So, normally I think only once someone has reached out to me proactively, but most of the campaigns I'm reaching out to and saying, I want to know more about what you do. And so I'm talking to them. And unfortunately, everyone I talk to doesn't make it to the Bet on Black pitch stage. Some of them just aren't ready yet, right? And so we are having personal conversations. Sometimes it's most, like I said, more than one. I've gotten attached to some of the founders because they're just doing so many amazing things. And so a lot of times I want to, even follow up with them to hear what's going on with the project after they've even come to pitch to us. So yes, we are having multiple conversations.
Yes. So Ms. Vivian is asking, what is the cost of doing a Form C and what type of lawyer do you need to assist you? Great question.
So you definitely want an SEC attorney, right? You do not want a general counsel person to help you with crowdfunding raise. They can help you with maybe the business entity part of it, but you really want a legal team to specialize in where you need them best. And so for crowdfunding and for anything with FINRA and SEC, you want an SEC focused attorney. The fees vary, Ms. Vivian, they really do. I mean, the filings themselves cost, I think to file your FINRA paperwork is a little less than $3,000. To get an attorney to help you with paperwork could be anywhere from $10,000 to $30,000. And then that's not even including the legal fees that they help you with kind of making sure you've got all of the right paperwork, making sure your Form C is right, and making sure this is right. And so it could get really pricey for a founder to raise money. But then, it's kind of a catch-22, right? So they need the money to scale the business. Then they need the money to run the campaign that gives them the money to scale the business. So, which is why we like to come and kind of fill the gap to at least provide enough education so people don't waste money, right? That's really one of our big goals, is we don't want the founders to waste money, because we realize that they need some capital to get this going. You that old adage, you need money to make money. Well, that's true. It's actually very, very true.
Yes.
But it's
I'm sorry, I didn't mean to interrupt you.
Go ahead.
Well, I also will say that we are in the process of turning how to raise $10,000 to $5 million, our session that we have for our entrepreneurs. We're in the process of turning that into an ebook. And part of the ebook will be resources with regards to Black SEC crowdfunding attorneys, Black accountants that focus on these types of crowdfunding campaigns, et cetera. So I've been on LinkedIn, I've been on the web, I've been searching for people. Over the next few weeks, I'm going to be talking to quite a few of these professionals and checking them out. That doesn't mean that they make it to the resource list that you shouldn't do your own due diligence. Please do. But we are behind the scenes. We have so much we're doing behind the scenes that we can't even talk about yet. But that is something that I'm ready to tell you now, is that we are working on that, and we are working on that resource list for people as well as a starting point. So, so Brenda is asking, who determines which states they can raise money in? The difference between the minimum and target amount and maximum is based on what, or why is it different? Thank you so much for all you're doing. I wanted to understand better how to review. So thanks, Brenda.
So who determines which states they can raise money? And that would be between them and the SEC and FINRA. I've not yet seen, I'll say that, I've not yet seen where that list on the Form C, where it doesn't list all of the states. I've not seen states missing from that. But they all do have to be listed there. So I believe that the SEC is going to make that determination along with the founder. The difference between the minimum target amount and the maximum, so that's going to be what they need, right? So for some portals, the founder actually decides how much money I need, right? But like I told you, on Republics, their minimum is always $25,000. So they've set that minimum themselves for their founders. But on some of the others, I've seen them go as low as $10,000. The maximum can be the legal max, like that $1,070,000 that we saw, or it could be that founder's maximum. So maybe that founder really only needs $250,000, right? And so that's what they're going to say their max is. It really depends on what they need for their business. And the other thing to remember, I don't think we talked about this in this session, but so if a founder, so the minimums are probably going to be more conservative. And the reason for that is, if a founder does not reach their minimum, then all of the money that people invested in goes back to the investor. So let's say I'm trying to raise $50,000 and that's my minimum, but I only get to 32. Everybody who invested to help me get to that $32,000, they get all of their money back at the end of my campaign, because I didn't make it to my minimum goal of $50,000. So the min is a very important number for a founder to come up with, because it could be it could be that or nothing. If you don't get it all.
I will say another thing as well, and this is something that professional investors do. They make sure that the minimum amount will help the company get to their next milestone. Because let's say, I'm going to use crazy numbers here. Let's say that the company wants to do something that's going to realistically cost $150,000, yet their minimum and all they raise is $30,000. Well, the investors are asking themselves, well, how are you going to be able to do this $150,000 thing for $30,000? Now, we as a people are scrappy, yet we can only be so scrappy as well. So that's something else that professional investors tend to ask and tend to think about, which then goes back to the Form C and goes back to the campaign page that talks about what are they intending to do with this money? What's their next milestone in their business? So Eleanor is asking, when you invest in debt, is your return guaranteed?
Eleanor, when you invest in anything, there is never a guarantee. Never, ever, ever is there a guarantee, right? A business could easily go belly up or not meet their milestones, and they won't have the revenue to pay back the debt. So, that's why we go back to the golden rule is, don't invest more than you can lose. And the other thing is, with 10K, we like to educate our community that these are long-term investments that we're embarking on, right? They're not going to give an immediate return. The average investment probably doesn't give a return for 7 to 10 years. So remember, they have to have liquidity events, right? So that could be acquisition, going public via IPO, and those things take time, right? These are startups. That's the other thing, right? This is not like us investing in Apple, right? Apple is already established. They've already got billions of customers, right? These are not established companies. These are startups. So, for many of them, even while they may have revenue, they may have been doing business for a while, they're still startups. And so it could be 5 years before they make a profit. It could be 7 years before someone even knows that they're around to be able to be acquired. So, these are not overnight sensations. Well, you should not look at it as such, right? Doesn't mean they can't be. Doesn't mean some of them may not be, but you don't want to look at it with that in mind. You want to look at this as, I believe, based on the information I've researched, this is a sound investment decision that could one day provide a return, right? And if that's what you come up with as your, kind of your yardstick, your measuring stick, then know that, in 7 to 10 years, it could be something.
Right. And another thing, when we had Needle on a couple of weeks ago, I made the comment that this is something that Google probably would buy. Now, I'm not saying that Google will buy it. We had suggested that Allende open up his equity crowdfunding campaign again because so many people were interested. But sometimes they don't make it mainstream, but there's a company that still wants to buy them for a specific purpose because they've cracked the code on something. So you want to think about that as well. So now we're starting to get a little bit more sophisticated, but that's how we're going to be in the next, hopefully the 10K Project investors are going to be in the next 5 years, is we want you to be sophisticated as well and really start thinking about these things. So we have 2 more questions and then we're going to go for the evening. Number 1 is from Awana in the chat, because this is a good one. I've invested in 2 of the founders from the Bet on Black pitches. How long does it take for an investor to receive an equity certificate? So number 1 is make sure that you invested for equity and not invested in a safe or in debt. That's number 1. And then number 2, Tawana probably can answer how long it takes if you've truly invested in equity.
So, each campaign that's doing equity, they have to work with what's called a transfer agent, right? And that transfer agent is kind of the manager of all the shares, right? It's a company that specializes in making sure you get your 500 shares and I get mine, right? So they're kind of making sure all the shares are allocated appropriately based on the investors. And a lot of times that takes a little bit of time, right? So the campaign has to close, the escrow has to clear, right? So campaign closes, then escrow clears, right? So that's a whole process, right? Well, let me back up. Campaign closes, portal reconciles to make sure that everybody who said they hit the invest button, they actually made an investment. For those of us who may have things sitting in our shopping carts and maybe we hit invest and then we didn't finish filling out the information, we went on to something else, like the portal will then follow up a couple of times to say, okay, you started this transaction. Do you really want to do it? So even after the campaign closes, there's like a period of time before escrow now clears for all of that. And then once that happens, information is sent to the transfer agent to manage the shares. And sometime thereafter, you will get your equity certificate. I can tell you, I invested in an equity deal last year, and it took me 3 months to get my certificate. I could see that the portal showed I invested. It showed how much I invested. So I never had any question about that. But it was about 3 months later when I finally got my certificate in the mail. And I was like, oh, goodness, because the certificate kind of makes it official, right? When you see it and hold it. But it did take some time. So I would just say be patient with the founder in the process, because the process is, kind of a lengthy one when you talk about all the steps after a campaign closes.
Right. And the last question is from YouTube, is from Tanju. I'm going to summarize it, saying that, we need counseling with regards to being entrepreneurs for the Bet on Black pitches, because so many of us don't know all the meanings of everything. So I want to say that we are working behind the scenes for a lot of that to happen. We have connected with some individuals who are also in the equity crowdfunding space. And without giving away too much, all I can say is we're working on that. And if and when it comes together, which Shawan and I believe that thus far that it will, we believe it's going to revolutionize the way Black entrepreneurs get into equity crowdfunding. And also it will help the 10K project as well, because we'll get more investors through the door. So, but yes, we're working on that, and we're working on a, not regimented, but a structured training and counseling, hand holding, all of that stuff. So just, give us a little bit of time to work on that, because these things do take time to pull together.
What I will say in preparation, right? So while we're preparing, you can start preparing as well. Make sure you have your business plan. Make sure you're keeping good financials, right? Even if you don't have any kind of audit or anything yet, make sure your books are in order, because all of those things matter as we take you on what that journey to a successful campaign looks like. We know that it starts with a business plan, and it starts with good financials. So if you don't already have good documented financials, start, right? If you got all your receipts and stuff in a box somewhere, get them out the shoebox and put them in, get a QuickBooks account and start putting them in a good format, so that you can prepare yourself for this professional journey. Because as you take on investors, it does change the game. You're now beholden to, this group of people, hundreds, maybe thousands of people now who are depending on you to be successful. So, it's about getting your ducks in a row.
Also, start pulling your team together too. Very important thing. I was working earlier today with a gentleman who was doing something really, really big. And actually, we've been talking for the past couple of weeks. I'm like, okay, but you have like a huge gap in your team. What are we going to do for that? So teams are so important, because again, when we talk about businesses going from one milestone to the next, there are certain people that you need in place in order to get you there. So with that, we want to thank everybody so much for being here tonight. Dwayne is asking Tawan about the pitch tomorrow night. You got a hint for everybody?
The only hint I will give is, and I'm ashamed to say this, but it's the truth. Tomorrow night is our first female founder.
Girl power!
Don't know why it took me so long to find a female founder, but first female founder tomorrow night. Super excited to share her with you all.
All righty then. Well, thank you, everybody. We will see you tomorrow. Tomorrow night at 6 p.m. is about leveling up your career, getting that six-figure job, or getting pay raises, all of that stuff. And then 8 p.m. is the Bet on Black pitch. So, okay, everybody, have a great evening. Thank you so much. Thank you, Tawana, for your review as well.